Good morning, Sage here live from the 𝐾𝐿 studios, and you're watching The Opening Bell, a show where we share with you a glimpse of the Australian share market opening trade scenario, along with the global and domestic drivers triggering the market's momentum. And in our first segment of the show today, we will look at how the early morning trades panned out, taking cues from the Wall Street's action overnight. And next, we'll zoom our lens on the sector movements on the Australian Stock Exchange. And then in the last segment, we'll look at the prominent newsmakers grabbing the headlines during the early trading hours. So viewers, let's get started. And while the Australian share market opened up on the last day of the week, tracking strong cues from the US peers, and while an extended lockdown in New South Wales continued to exert pressure on the market, with the ASX 200 later pulled down by a dip in the utilities, IT and healthcare sectors primarily. And on Wall Street, US shares scaled record highs overnight, buoyed by robust company earnings and encouraging economic data. The Dow Jones rose 0.45%, the S&P 500 climbed 0.4%, and the Nasdaq edged 0.1% higher. And the second quarter GDP data showed that the US economy grew by 6.5% on an annualised basis, up slightly from last year. And meanwhile, the jobless claims stood at 400,000, resuming their downward trajectory. And even as the two figures were below market expectations, investors largely shunned the disappointment. And on Wednesday, the US Federal Reserve had said that it was not the right time to start tapering economic stimulus, pinning the dollar at a one-month low. And investors were upbeat after the Federal Reserve reiterated that the US economic recovery is on track, despite the threat posed by the Delta mutant of the COVID-19 virus. Meanwhile, stock markets traded higher in other parts of the globe on strong earnings in Europe. The concerns over Chinese sell-offs were also eased after the country's regulators called banks overnight to smoothen concerns about a widening regulatory crackdown. Taking a look at the bond market, the US Treasury yields edged higher after a soft 7-year note auction added to the positive risk tone, while the US dollar declined to a one-month low, a day after the US Fed said that the jobs market still had to recover more before going ahead with easing monetary stimulus. The dollar index was down 0.383%, its lowest since June 29. And on that note, let us now skim through the opening trades of the ASX 200. The top performing stocks in the index were Asset Management Group, Janus Henderson Group and gold player Silver Lake Resources. Materials was the leading sector, pulling up the strings of the ASX 200. And besides that, lithium player Orocobre, diversified miner IGO and iron ore miner Champion Iron traded higher. Meanwhile, Origin Energy was the leading loser on the board. As per today's board, the integrated energy company expects to incur a massive non-cash post-tax charge of 2.2 billion Australian dollars for the financial year 2021. Then healthcare players PolyNovo and Clinuvel also slipped. And moving on to the next segment, let us glance through the ASX sectoral charter. Well, the Australian energy players Beach Energy, Santos and Oil Search traded in the red zone during the early trading hours, despite oil price upticks as supplies in the US further tightened and the US dollar softened. And while the US crude rose 1.64% to $73.60 US per barrel, Brent was at $76 US, up 1.77% on the day. Let's now move over to the miners space. Heavyweight miners BHP Group, Rio Tinto and Fortescue Metals traded higher, although iron ore prices fell, weighed by prospects of a slowdown in demand from China. The most traded iron ore for September delivery on China's Dalian Commodity Exchange closed 1.6% lower than in the yellow metal space. Newcrest Mining, Evolution Mining, Ramelius and Gold Road edged higher amid the gold price uptick. And gold prices rose by 1% after investors cheered that the Fed was more focused on economic growth than controlling price pressures. And such an approach bodes well for the yellow metal, considered a hedge against inflation. Overall, a dip in utilities sector on the back of a dip in AGL and Origin Energy shares, along with healthcare and the tech sector rout, exerted pressure on the market sentiments. And now it's time for a short break, but please stay tuned as I'll be back with more updates from the Australian share market. Crypto talk by 𝐾𝐿. The crypto market has been red hot given the Bitcoin rally since the past year. And now the most famous cryptocurrency has got competitors, Dogecoin and Ethereum. If the crypto market excites you, tune in with me, Sage, to know the latest developments about the existing digital currencies and the new ones that are joining the race. I'll help you understand the opportunities and the risks the crypto market has in store for you. For all the digital currency related developments, continue watching Crypto Talk by 𝐊𝐿𝐴𝐚. Welcome back, viewers. Hope you're enjoying your morning. This is Sage, your host, live from 𝐊𝐴𝐚 Studios. You're watching the opening bell, where we share with you a glimpse of the Australian share market's opening trade scenario. And let's begin now by taking a quick look at the highlights of the prominent ASX stocks under the spotlight during the early trades. To begin the segment, Origin Energy slid on the board on disclosing charges ahead of earnings updates. The integrated energy company expects to incur a massive non-cash post-tax charge of 2.2 billion Australian dollars for the financial year 2021, as the company has written down its energy markets business and a deferred tax liability for its Australian Pacific LNG unit. Then the financial services company AMP dipped, sued by the Australian Securities and Investment Commission. The ASIC has started a civil proceeding against the company in the federal court, as it estimates over 1,500 customers were charged over 600,000 Australian dollars in fees for no service. Also in the news, financial technology company offering buy now, pay later services Sezzle dipped despite reporting more than double merchant sales for the June quarter. However, for the financial year 21, the company reported an operating cash loss of $61 million cash on hand. And another newsmaker under the spotlight is infant formula merchant Bubs Australia, who traded higher despite posting a loss of financial year 2021, and the company refrained to provide any specific guidance, putting more emphasis on the uncertainty to its accelerated growth in time. And next on the list is resources-focused royalties business. Deterra Royalties was under the spotlight during the early trading hours on reporting mining royalties of 55 million Australian dollars for the June quarter. The company expects to garner a total revenue of 145 million Australian dollars for the financial year 2020, including 140 million Australian dollars revenue from royalty. An Australian petroleum company, Ampol, was also under the spotlight on sharing its plans to develop EV charging networks. Well, the company is set to invest 100 fast electric vehicle charging bays at its retail networks in a deal co-funded by the Australian Renewable Energy Agency. And thank you for joining us on that report. That's all for now in the early morning trades. Stay tuned to 𝐊𝐴𝐚 TV as we have many more shows lined up for you, sharing live updates across the economy, markets and sectors. Sage signing off.